Hello, everybody. Welcome back. Welcome back. It's edponzi.com. Good to see you. Good to have you on board. It's Monday night. No, I'm sorry. It's Thursday night. I forgot what day it was. I guess I'm just in a good mood. What can I tell you? Usually I'm in a good mood when my stocks are up huge after hours, like JCPenney is today. Anybody see that? Nice earnings report from JCPenney today. Looks like we're at our highest point in nearly a year on the stock. Looks like could be considered a head and shoulders or possibly an ascending triangle in here. But one thing I'll point out to you is that the moving averages are completely flat. And what is that telling us? It means that there's no direction. See, you got to understand, everyone hates JCPenney. Everyone hates JC. Look at the chart. Everyone hates this chart. Everyone hates this company, and we bought it. Why did we buy it? Because even though everyone hated it, we could see that it wasn't no longer falling. It was now flat. And we bought it at $8.60, $8.60. As of this after hours quote, and I can't vouch for that quote. I've heard a lot of different numbers after hours. But if that's accurate, that 1075, that means we are up 25% on the stock. 860 to 1075, 25% move. And really, just getting started. As long as as long as this continues tomorrow, I think we could go a lot higher because we've broken above all the resistance. Anyone who has shorted the stock this year is now officially losing money, and they're about to get squeezed out of the trade tomorrow, so I think it goes higher. Okay, where's resistance? I guess you could say this area here. You see this area right here? That's around 12 or so. So what's that? Another 10. What's another 10% between friends, right? Maybe more. How's that sound? I sure like the sound of that. What's another 10, 15%? We'll take it, okay? Now, I feel a little bit like the mad scientist from the horror movie, right? Because a lot of people were telling me that I was wrong about JCPenney. And not surprisingly, all those people were fundamental analysts. So I'm not putting down fundamental analysis. We do our fair share of fundamental analysis here, right? But the technicals overrule. So I feel a bit like a mad scientist. Like they said I was mad for buying JCPenney, but I showed them, right? So, all right. So anyway, and off we go. And it looks like we're just getting started. I'm so happy. And I know some of you are along, so it makes me happy when my students make money. Okay? And hopefully that continues. As far as our other stocks are concerned, we're now up more on JCPenney on a percentage basis than we are on Apple, which is saying a lot because we're up about 21% on Apple, but we're up 25% on JCPenney. You can't see it, but I'm smiling when I say that. And so I'll turn that smile upside down just a little bit with some Dean Foods. Dean Foods had a bad earnings report, and it got rocked down, but it popped back up. But yeah, we're still down on this one. We're still down a good bit on this one. So we don't have all winners. Nobody does. So that's okay. On the short side, we are doing well with Lululemon. Now, one of the interesting things, you see a lot of retail companies are reporting earnings this week. And one of the interesting things I noticed was that Macy's, a big department store in the U.S., apparently is selling a lot of athletic wear, women's athletic wear. That translates to me to yoga pants. I think everyone is now going to sell yoga pants, and Lululemon is just beat. The chart looks terrible. We're short. We've been short for a while. And we're happy to stay short. We're making money. Life is good. Lululemon, I don't know what are you going to do to stop other companies from making yoga pants? I mean, there's no barriers to entry, right? Now, I'm starting with stocks today because there's a very valuable lesson about the J.C. Penney. So you Forex people, I really want you to pay attention to something I said about J.C. Penney. And I'll go back and say it again in just a minute. We just have two more stocks to look at. We are also short TJ Maxx, which is basically a push at this point. It hasn't really gone up or down. And our newest short is Kimberly-Clark. Like, we're down like 50 cents on this one on a $100 stock. So that's much less than 1% that we're down on this. So barely moved at all. So, all right, back to J.C. Penney for a second. There's a very valuable lesson in here. Everyone hated it, but it stopped going down, and that meant that it was likely to go up. British pound, everyone loved it, but it stopped going up. Because a lot of you are asking me about the British pound. British pound is the opposite of J.C. Penney. We were buying it down here. You know what? Everyone hated the British pound down here. Somewhere along the line, everyone began to love it, and that's when it was doomed. Okay? Now, the thing about the fund, and one last thing on J.C. Penney, like I said, everyone who thought I was wrong was pretty much a fundamental analyst. The technical people got it. The fundamental people didn't. The fundamental people were saying, this company's burning money, right? They're just losing money left and right. It's not a good recipe for making money to just lose money quarter after quarter. Guess what? That was true yesterday. Tomorrow, now we know after the earnings report, the company's making money again. They made something like, they had like something like 76 million in free cash flow, which was much better than expected. And they were better than expected on earnings. They lost money overall, but they lost less money than was anticipated. They sold more stuff than was anticipated. Okay. And they have more free cash flow than was anticipated because none was anticipated. And now the fundamental story is going to change. All the fundamental people who thought I was wrong last week, now next week they're going to say everything that I just told you. Well, they're doing better than expected and they have free cash flow coming in. See, the fundamentals are always backward looking. I'm not saying they're not useful. We use them here too. But they're always backward looking, particularly in stocks where they hold that information until it's time to release earnings. So the fundamental story is now going to change. Now, guess what? I'm not psychic, but I have a feeling that tomorrow morning a lot of companies, a lot of analysts are going to upgrade J.C. Penney. Now that it's too late, now that we've already made 25% on the trade, now they're going to say it's time to buy. Gee, thanks a lot. That's not really very helpful, is it? You see, now the story is going to change. Now the narrative is going to change on J.C. Penney. But the facts changed first, and then the narrative changes. Well, the same thing with the pound. And I'll tell you what I think is happening with the pound, because everyone's asking about it. I got a lot of questions this week to get to, and we're going to go into Forex now. What's going on with the British pound? To me, the UK economy is growing and getting stronger. I would have thought it would strengthen the pound. Exactly what I'm talking about right now. Yes, the UK economy is, I've been saying it for a long time, the strongest of the developed economies is the UK economy. But everyone knows it now. Down here, we caught on early because everyone hated it down here. Nobody knew it was going to be strong. The IMF was lecturing them about, you know, too much austerity. Shows what they know, right? But we saw it in the PMI numbers first. The PMI numbers started to look fantastic for Great Britain, and we got in, and it bottomed out. It started to make higher highs and higher lows, so we said, okay, we're in, and we started to buy. And we made a ton of money on this. This was our best trade last year, and I know a lot of the people in this room made 400, 500, 600 pips on British pound last year on one trade, okay? So now, yeah, they still have the growing economy, but everyone knows it. It's completely priced in. Huge breakdown today. Now let me take you to the fundamentals, and I'll tell you something. Here's the beautiful thing about Forex fundamentals. We don't wait for an earnings report every 3 months. The Forex fundamentals are constantly being put out there. And what the fundamentals told us this week about Forex has me, I'm a little bit less surprised that the pound is falling apart. Let me show you what I mean. First of all, Thursday morning, right? German GDP, negative 0.2% versus the first quarter. Who is Great Britain's biggest trading partner? Germany. Does it make a little bit more sense now? Even though things are going well in the UK, if your biggest trading partner is in trouble, that's going to translate, that's going to affect you. It's a global economy. It's a global economy. So really, Germany, negative 0.2. France, 0. And Italy, we already knew, is in a recession. That's your 3 biggest economies in Europe, all growing at 0% or worse, contracting. I think this has a lot to do with what's happening in the British pound. Think about where the UK is located, and think about where Europe is located, and they're just separated by a little bit of water. They do a lot of trade back and forth. The biggest trading partner for the UK is Germany. The second biggest is France. Business is bad in both places. That's got to affect the UK. Now, did anyone see earlier this week Japan's GDP report? Japan GDP, negative 1.7. I'm sure Great Britain does a lot less trade with Japan than it does with Europe, but that can't be good. And just remember, we're all tied together in a sense that it is a global economy. This is bad news for the U.S. too. If Japan and Europe are going into recessions, that doesn't help us in any way because they're going to buy fewer things from us here in the U.S. when I say us. I realize not everybody listening to me is from the U.S., so forgive me for that. So we're all sort of interconnected. It's like if you're sitting in a room and like maybe everyone is saying, oh, wow, you know, the UK sure looks healthy and the US sure looks healthy, but you're sitting in the same room with Europe and Japan and they're both sneezing and coughing and sneezing and coughing, and you're sitting in the same room. Okay? It's probably going to affect you. And I think we're seeing that now. Okay? So does that make a little bit more sense? It's the opposite. The British pound is essentially the opposite of JCPenney. JCPenney, everyone hates it, but it stopped going down. The British pound, everyone loves it, and it stopped going up. Okay. All right, let's continue. Great question. Here's another one. I'm looking at 2 levels in euro pound to short this pair again, 80.31 and 80.83. Let's go euro pound here. We'll take off these moving averages. And 80.31, I'll drop a line. Right there. And 80.83. Well, if you shorted it at 80.31, it's kind of hard for me to argue with that because that certainly looks like it was the absolute high today. So I got to say, kudos to you, sir, and congratulations. I would just be careful about you're not necessarily wrong about the trade, but let's talk about your rationale for the trade for a moment. 80.31. If you shorted it there, I got to tell you something, man. You picked out a great level because that was prior what? That was prior resistance right here. You can see it right there. And today, it just hits that same level and drops like a stone. I salute you, sir, if you shorted it there. Good job. You say long-term fundamentals undeniably in favor of GBP. What are your thoughts on this pair? That's, I think technically that was a brilliant move. Fundamentally, just be careful because, like I said, right now everybody loves the UK economy, but the price is trying to tell us something, like it's going to change. And clearly the euro, the lowly euro, has been gaining ground against the pound. The lowly euro. And speaking of the euro, have you noticed that with all that bad GDP data, it's not really going lower against the dollar? It has me a little bit concerned because, I'm short, right? I'm hoping for my second target here. This thing's taking forever to unfold. I don't care. I'm going to the beach tomorrow. Maybe it'll hit while I'm on the beach. I don't know. I ain't worried about it. But, yeah, I'm a little bit concerned the fact that it's no longer falling even though the news is awful, right? You'd like to see it fall on bad news. So that's a little bit of a concern, but it's not enough of a concern to get me out. Okay, so all I would say is beware about the fundamentals being undeniably in favor of the British pound because that could change. That could change, okay? All right, great questions. Man, I love my students. Great questions. And I got in some Euro Swiss today. Let's pull up the old Euro Swiss at 112.17. Good job. You're down 1 pip. I'm down a little bit more than 1 pip, but I'm hoping it comes lower because I want to buy more. The low so far, 121.09. If I can get it to 121 even, I will buy more. Where should the stop go? Under 120? Yeah, I think if we take a look at the week, whoops. I think if we look at the weekly chart, you'll see it. Darn it, I'm looking at the wrong chart. Euro Swiss. All right. Definitely below 120 because that whole area right there. Zoom in on that. That's clearly being enforced, let's say, by the Swiss National Bank. So 1.2. Darn it. There you go. 1.2. You can see what happened when it got there. And that's a weekly chart, so it actually went on for all of 2012, or a good part of 2012 was bouncing off that level. The Swiss have made no indication that there's any change in plans as far as creating that buying pressure at 120, that demand. So, yeah, you got to go under 120, maybe 20 pips, maybe 25 pips under 120. And if it keeps coming down, I'm going to buy more. I'm going to buy more at 121 even. I'm going to buy more at 120.50. I'm going to buy more just above 120. And so I'm hoping it comes down a bit more. At least let me get in some at 121. And then by the time all is said and done, I'll have a full-size position. It's going to average out to something around 120.75 or thereabouts, maybe a little bit lower, 120.60, something like that. And then I'll have 60 pips of downside. No, really 85 if the stop goes not on 120 but under it. So maybe 85 pips of downside and just hundreds and hundreds of pips of upside. So, yeah, I like that trade. It might take a long time, okay? It's going to require some patience. But I think it's I like that trade a lot. I do like that quite a bit. Let's get some mentoring questions. I'm looking at New Zealand yen. Is this an elevator trade? Let me take a look. See, that trend line broke, right? So that's history now. I'm looking at this on the weekly, but it could just as well be any time frame. there certainly is some support and resistance here, so it could be an elevator type trade. It could also be a big old double top, right? Could be a double top. So, but the beautiful thing about the elevator trade, if you bought that bounce here, and the elevator trade is something that, you know, that's from the Forex course. If you bought that bounce, then you're probably pretty happy with it right now, and I can't really argue with that. Also, if it does break down, if it fails to bounce further and breaks down, you've got your stop in place. Beautiful thing, man. That strategy lays it all out. Entry, stop, multiple targets, right there in front of you. Okay, so yeah, I like that. I like that as a bounce of that elevator trade. Just be aware that if that elevator should break, that support level should break, and it's around 86. I'd say it's right around 86, but it's actually a little bit underneath it. If you want to get down to it, it's probably 85.80, maybe 85.75. If it breaks that, then you got to short it, in my opinion. Okay. Pound fell hard. Was it because of the inflation report? Again, the inflation report or any report could have been a catalyst for this. But look, it's six red candles in a row now for the British pound. It's clearly falling out of favor. And if you think about it, someone's going to ask next about the carry trade, so I'm going to answer that question. I'm going to go into that as well. Yeah. If Europe is going into a recession and Japan is going into a recession, is the Bank of England going to raise rates as much as we expected them? Probably not. Is the Reserve Bank of New Zealand going to raise rates as much as we anticipated? Probably not. Okay? So I'm looking at these other countries having really bad GDPs saying we don't all live in a vacuum. It's a global economy, and certainly the effects can and probably will be felt in the UK and in New Zealand. So you're seeing a big pullback because everyone was very excited. They're going to raise rates, and now it's like, man, if the whole world is going into a recession, how much are you going to raise rates really? And the same thing is true with New Zealand, which has found a lovely demand level down here near 84. It continues to pop out of that. But you can see how they sold this one off too. I think it's the market's way of saying, hey, you know all those interest rate increases you were expecting out of New Zealand and out of Great Britain? Maybe don't expect quite as much. And that's why they're being sold off. Because I think they were looked at as potential carry trades, and now they're not being looked at as potential carry trades. So, Ed, I started this training to learn more about the stock market, but I have also rekindled my love of Forex. I recently purchased your book, the Ed Ponzi Forex Playbook. Thank you very much. And that book is very underrated, gang. Ed Ponzi Forex Playbook is probably the best book I ever wrote about currencies, but it's the least popular. And just go figure. But if you like, Forex Patterns and Probabilities is very popular, and it's a great book. But if you want something deeper and meatier that begins to marry the fundamentals with the technicals, then you go with the Ed Ponzi Forex Playbook. You should definitely read them both. Heck, right? And so my question is, do you think the carry trade will return this year? And again, they're killing these currencies that were expected to become good carry trade winners, and that's what's happening right in front of us. So that answers that question, right? I don't think it's going to come back this year. Let's see if these economies can get themselves straightened out, and then maybe we can talk about next year. It'll happen sooner or later, and when it does, it'll be a beautiful thing. Another question about pound. I drew a, whoops, pardon me. Someone drew a Fibonacci. Let's draw that same Fibonacci from the lows way down here up to the highest point. And let's Strong support is at the 38.2. What do you think? I agree. There's tons of bounces off of there, but look how far away it is. We're talking about 162.78. I mean, that's 400 pips away, and it's already been pummeled. So, I mean, if it gets down there, yeah, we can talk about it. But, you know, if it gets down there, then we're probably going to, we're not even going to be thinking about buying at that point, right? At this point, I think we're thinking about shorting rallies, right, on pound dollar and even maybe on pound yen. Not so much on pound yen. Pound yen's held up a little bit better, actually. And again, if you didn't know, we dumped this one at 172 about a week ago. I just couldn't take it anymore. And the reason for getting in the trade seemed no longer to be there. This was an ascending triangle. It popped out. That's classic. You buy that break. And then you know what it did? It went and went the other way, and it broke the trend line, and forget about it. I'm out of there. Okay. All right. Great questions, everyone. Did we get them all? I think we did. No, there's more. Open interest. Help me understand the change in open interest in the commitment of traders before a pair is likely to turn. That's a great question because I alluded to that earlier and I never really went into it that deeply. Okay, we're going to pull up Japan. Now, the Japanese yen, we see, again, it is a massive short position and a tiny long position. But I'm also looking here saying interest in the trade, open interest is growing. So when open interest is growing, we're not necessarily looking for the turn right away. It's when the open interest begins to contract. Then this reversal that we've been speaking of, this potential reversal where the yen becomes strong because everyone's short, becomes much more likely when the open interest is contracting as opposed to expanding. Right? So in other words, yeah, everyone's short, but they're still piling in. They're still piling into the short side. So this could continue for a while. But when it begins to contract, some traders use that as their signal to say, okay, they're losing interest in the trade. Right now, all these shorts are very interested, and a lot of them are fresh. A quarter of them are fresh, right? 24,000 contracts. It's almost a quarter of the whole short position. So there's a lot of fresh contracts. There's still a lot of, you know, they're still interested in the trade. When the open interest begins to contract, that's usually a signal that something is turning. Great question. What can I tell you, folks? Keep those great questions coming in. I really enjoy putting this information out there to you. As I'm sure you realize by now, these are now up on a YouTube channel, on a private YouTube channel, just for you and you alone, just for the edponzi.com students. And, you know, keep those questions coming in, and we will continue to answer them. Congratulations to everyone who was in on the JC Penny trade. That is just a thing of beauty. Congratulations to everyone who is short Euro US dollar. Hey, it's not moving much, but we're winning. And congrats to everyone who's long Apple. We're up 20% on that. And yeah, we're down on some others. We're down, not afraid to admit, we're down on Dean Foods. Dean Foods, which said that prices were beginning to hurt them. Keep something in mind, too, about rising prices. And this is something for all the stock people out there, too. Hopefully you're still listening. Putin's a very bad disruption. And he's not going to import food from a lot of different countries now. He's not going to import food from the US, from Europe, or not even from Australia. What's that going to mean for supply and demand of food? It means food prices drop. So if I have to feed my cattle because I want to milk them, it's going to cost less. Corn, look at the price of corn. Corn is getting creamed. That's the weekly chart, right? Putin's not going to buy any corn from us. Putin's not going to buy any chickens from us. You know what's going to happen? The price of those items is going to fall. Putin's not going to buy any cheese from us. The price of cheese is going to fall. Pizza companies are going to make more money because they use a lot of cheese. You see that? He's a bad man. But there is going to be a silver lining to the cloud that is Putin, in that food prices should drop for the countries that export to Russia. The prices should fall. Okay? Something to think about, something to keep in mind. So if you're thinking about buying, you know, that Domino's pizza now that it's way off, you know, a little bit off its highs, and it's still pretty bold chart there. Now that it's off its highs, maybe you like it a little bit more. Maybe Papa John, maybe you like it a little bit more. It's way down, but the price of cheese is about to get a lot cheaper. Maybe that's good for them. Okay? We shall see. I'm not betting on it just yet, but it's something to watch. Okay, folks? My name's Ed Ponzi. I'm out of here. Thank you so much for listening, and we'll catch you again in a couple of days. Everybody, take care.